Hey, what's up, everybody? Welcome to Trade Like Nick. Before we begin, I just want to make sure we go over the disclaimer. Welcome, everybody. I am not a financial advisor, as you guys could probably tell. Your responsibility, know before you trade. Nothing here is for advice. This is all for educational, informational, and entertainment purposes only. This is not investment, legal, or tax advice. And this is not considered your specific financial situation. I don't know what your risk tolerance is, your investment objectives, and trading stocks and options involves extreme risk and loss and is not suitable for everyone. Past performance does not guarantee future results, and you're entirely responsible for your own actions. So let's take a look here at the portfolio. We always want to start off the day seeing how we're doing, what positions we have on, and what positions we need to either adjust or close out. So yesterday, if you guys were into my live stream, we saw 6 trades, and let's take a look here. We're up $248, and we started with a $3,000 account. So you guys see we started on July 6th. This was the 30-day challenge, right? And I'm trying to make 1% a day. So 1% a day is $30, right? Because 3,000, divide that by 100, you move the decimal 2 to the left. So that's 30. So we're trying to make 30 bucks a day. This is day 4. So we're actually ahead. We're up $246, right? It's here, 247. And let's take a quick recap of what positions we have and where we're up. So right here, we have Apple still waiting to get triggered here. Right now, we are in AIG. We shorted the stock. Whenever you see a -1, that means I shorted it. So let's take a look at the chart here. AIG. And let's show you guys how to make the charts look a little bit better. So under appearance, background, I like to go, here, let's go white today. Apply it. Actually, we're going to go black because my candlesticks are, there we go. I'll apply that. And now we can see that the daily chart, if I ever want to pull up my tools, make sure you click on my tools and put it on each chart. What that does is it puts it right here, right along the top, and then you can pin it like that. See that? And now I can access my drawing tools right away. And if I want to go to a 1 year, 1 day, you can see it'll automatically go to AIG. This is the position we saw, right? We saw this big inverted tail, this inverted hammer, and then it confirmed that it dropped yesterday, and then it dropped again today. My stop loss is right above here. Potential to go all the way down. So that is our one position in AIG. Next up, we have Akamai. Akamai, we're up $5, right? So Akamai, if you want to look at when we actually placed the trade, we placed this yesterday, right, at 11:56, right before the market closed, an hour before. Our average price, we bought it at 124. This is how much it cost us. This is how much it's going right now. The mark is the current price, 129. So we're up $5 because I only bought 1 share, right? So if you go to Akamai, I could just right click. And then if I want to take it to the chart, I can go to here and then go to quick chart, or I can go to the TOS charts, right? So I'll just go to the TOS charts. And this is what we saw yesterday. You can see we saw this bounce, right? See how Akamai came down? It bounced off of 110, bounced off of it again 4 days later, and then boom, now we had this big confirmation. Look at the volume there. See the volume? There was big interest, a lot of demand here. And so we entered right here. And then today it followed through to the upside. And that's where we have just one share. We made $5. Remember, our goal is only to make 1% a day. 1% a day, folks, is 20% a month. 20% a month. If you compound that, that is doubling your money every 3 months. Okay, so 1% a day. This is where most people who are trading for a living, when you're trading for a living, you have to have specific goals, specific objectives for that day, for that trade, for that trading system. And so you're going to have some losers and winners. But if we put our risk to reward on our side, now we can actually have that edge. So now let's take a look at our next position. We're down a little bit on Bank of America. I shorted this. This was shorted yesterday at 59.07. It's now at 59.30. So what does that mean? That means that on Bank of America, I was betting that it was going down, right? Because we saw this big inverted right here. It gapped down. That was my confirmation. But today it went back up. So, we're still in the trade. Our stop loss is still above here. Our target is down here. I actually might move my target back up a little bit higher because the prior low is right here. So that is how easy it is to move your trades and adjust it. So Bank of America, we got GILD. We shorted this stock what day? Yesterday at 11.19. It's 137. We bet that it's going down. Now it went down to 133. We're up $1.98. For people who are not used to shorting stock, right? This is right? People who are not used to shorting stock. Oh, that's Gilead, my bad. GILD. This is how you short stock. Whenever you see a stock hitting resistance levels, boom, boom, it hit that resistance level again yesterday, and then we followed through to the downside, right? We're looking at present price, and we see where is this relative to the past price, right? It hit resistance, went as low as 124, hit resistance again. So I use the past to predict the future. I'm thinking it's going to go maybe down to, maybe 127 maybe. So this is my stop loss. See STP, because I'm shorting it, I'm betting on it going down. If this thing goes up, I want to make sure I exit the position. I don't want to hold on to a loser. This is called defined risk trading, folks. And this is what you need to learn to do. And LRCX, Lam Research, $21. We're up $19 and 21 for the day. So what did we do here in Lam Research? We bought one share, and we bought that also yesterday at 11:07 Pacific Standard Time. We bought it at 334. Boom, it's up 355. So let's take a look at all LRCX. This is my boy's company, all Lam Research. It's also my mother's maiden name, Tui Lam. Shout out to my moms. Shout out to all the moms, right? So what did we see here? We saw that Lam Research had a nice upward trend, and I like stocks that are just trending nice and slowly at a 45-degree angle. And as it went higher, 438, we actually had over a week of pullback. And then look at this. It bounced right off of this support line, and then boom, we had followed through today, and it gapped up, and then it boom. Even though it gapped up and it's a red candle, this is still an up day, right? Because it gapped up, even though it's lower, it's still higher than the previous day's open. So that's our position in Lam Research. This typically is not a good sign where it gaps up and then is trading lower. So I might look to take profits a little bit at the end of the day here. So we'll check back every top of the hour. Remember, I'm always looking. So we shorted Altria Group, right? Because we don't like cigarettes. So Philip Morris, we shorted it, and this is what we saw, right? Stop. We saw it hit some resistance right here. So I'm thinking that it's trying to go back down lower. We'll give that some more time to work out. Nike, we're still waiting to get triggered. NVIDIA, we're up $1.47. So let's take a look at NVIDIA real quick. And you know, a quick way to actually look at all your charts, right? See how it broke through this diagonal trend line. And so we're going to see if this thing, it might pull back a little bit before going higher. So we'll take a look. But let me show you a quick way that you guys can all go through your watch list real quick. See where it says watch list? You could actually click on the watch list and look at your current account position. See where it says current account positions? These are all the stocks that I have in my current account, right? And so if we make this a little bit bigger, you can see we went through here. Let's go through Apple. And then to make sure that you connect it, see it's the red link, 1. I got to change that to 1. So now if I just click on Apple, it'll pull up the Apple chart. Let me go into my settings and make sure that my there's not so much space here to the right. I hate it when this happens. So I need to just go to settings, go to time axis. I don't want 1,000 bars to the right. Let's just give it 15. So then, whoops, where did it go? 15 time. Oh, 15. Apply it, and now the chart looks a little bit better. So see how this thing is going. It hit this downward resistance. If this thing breaks through, I might actually go long Apple. So here, I am waiting for Apple to break through, and then if it does, it's going to trigger my stop loss right below here, because if this thing does break through, which looks like it's trying to, right? The prior high back here in June was at 315. Right now we're trading right at 314. We're bumping our heads here, folks. So you know what I'm going to do? If this thing breaks a little bit higher, I'm going to cancel this order. I'm going to get in right here. If this thing can break above 3.7, let's give it here 3. I'm going to go buy. Edit. I don't want a limit. I want to make this a buy stop. And in today's lesson, I'll show you the mechanics of trading, because trading is not that complicated. Trading is actually rather simple if you know the mechanics. So if I'm going to say buy stop, what this order says is do not buy this until it breaks through the resistance, right? This is like a video game, guys. You want to not try to predict, but wait for price to actually confirm, and then you enter the position. This is what they never teach you in school. They don't teach you how to trade, how to invest. They just say, oh, go put your money, give it to a money manager who can't even outperform the S&P 500, right? These are things that if you have specialized knowledge, and that's what I'm here to help you guys, show you guys how to trade, how to take control of your own money. Don't let other people control it, and then they can't even beat the index. The person that worries and cares about their money the most is yourself. All right. So here we have AIG. We looked about that earlier. Then look, I can go to Akamai, right? We're up on Akamai. Bank of America, we checked. Gilead, we checked. LRCX, we checked. Mo, Nike, NVIDIA. Look at how fast I can go through my positions. Oracle, this was a great setup yesterday, folks. Look at this. On Oracle, we saw that this thing was bouncing here one time, 2 times. I think that was a song. A one time. Oh, that's Popo. One time, I think that's what they call the Popo. See, boom, 134, boom. We got follow up to the upside. Look at this. Oracle was trading as high as 248. Imagine if you were this poor sucker that bought it way up here, didn't know what to do, technical analysis, right? This was a run up. I would have taken the profits already. But if you held it and then you're like, oh, I'm going to wait for it to come back. Boom, boom, boom. Keeps dropping like a blood trying to catch a falling knife. You're bleeding. Boom. We got some demand. Price is nothing more than demand and supply. There's only one law in trading. You guys know what that law is? It's the law of supply and demand. That's what all these candlesticks are. These are footprints of money. And if you can find where these footprints attract demand, you can enter in and then boom, get in, make a quick buck, get out. Trying to turn $1 out of 15 cents. That's a dime and a nickel, folks. All right. So next up, we got Pfizer. So let me see, Oracle, right? We're up $6, right? This, folks, is only one share. I was doing this just placing one share. We're up how much in the account again? We're up $250 from 3,000 of this week, right? This is almost 10%. 10% of 3,000 is $300. I'm up almost 10% in 4 days. This is how you can actually double your money and accelerate your wealth. If you can earn 5% a day, you're doubling your money every month. Did you guys hear what I just said? Let's prove it. You guys want to prove it? Because you guys know I'm a math teacher. So I don't want to just say it. I want to prove it. Because if the math don't make sense, it don't make dollars. All right, check this out. You have $3,000. If I earn 5% a day, that's multiplied by 0.05. That gives me $150 a day. Would you guys agree? All right. Let me make sure my audio is good. Is everybody, if you guys are in the chat, can you let me know what stocks you want to take a look at? All right. I'll pull it up. We'll do a quick analysis. And then if I like it, bam, let's put it on, right? You got to learn how to take risk. If you don't know how to take risk in the market, in other words, if you don't know how to recognize opportunities where the risk and the reward is worth it, and you have to learn to accept risk. People don't respect risk and they don't accept risk, because when you respect risk, you always put a stop loss. And if you don't know how to understand to take risk, you're going to let opportunities pass you by. Makes sense, right? All right. So 5% a day is $150 a day. I can show you option strategies where you can sell and collect $150 a day, because there's 20 trading days in a month, right? We don't trade on the weekends. So if you make 5% a day, which is $150 a day, you multiply that by 20 days, 20 trading days in a month. How much does that give you? That's $3,000 of profit. Bam. Does that blow your mind? That should blow your mind, because if you can double your money every month by earning just 5%, then watch. After 1 month, I have 6,000. After 2 months, I have 12,000. After 3 months, I have 36,000. And this is starting with only $3,000, earning 5% a day. That is more on the advanced side. I'm here to help you guys who are beginners. We're going to level up our strategies as we go through this 30-day challenge. But first, we want to start off with stocks. Stocks can give you 1% a day, right? As you can see, I'm doing it right here, just buying and selling one share of stock. People, you can do this. You can day trade stocks. Do you guys know that the day trading rule just got eliminated? Let me show you guys this. Before, you would have to day trade. You needed $25,000 in your account. So PDT rule change. Watch. If you guys here, quick video. This is one of my brokers. This is Tasty Trade. I also trade, of course, on Thinkorswim. But here is where all right, so it's already July 8th. So this rule was in effect for the last 25 years, and it was to prevent people from blowing up their accounts. But what they didn't realize was brokers are smart enough to know that, okay, we can manage our own margin. We can manage our own risk. We don't need the SEC to say, oh, you need $25,000 a day trade. They got rid of it. Now you could buy and sell stocks in the same day without being penalized. Before, you can only do 3 trades within a 5-day period. Now you can place 3 day trades in a day and do it again and again and again, and they won't flag you. Oh, this is another cool thing. So basically, this is just saying you don't need to date, you don't have to worry about day trading rules, which in other words, you can now day trade. You could day trade with as little as what, $2,000. So here's Robinhood, people that trade on Robinhood. This is where all right. So remember, retail investing, that's us. That's me and you. We're retailers. We got small accounts. Institutions got millions and billions of dollars, right? What's great about trading is we can trade on the same playing field as the institutions. But here's the sad reality: 90% of people who trade lose money. They don't know how to put stop losses in, they don't know how to manage their own money, right? So I'm here to change that. I'm here to flip the script. I want you guys to learn how to trade like Wall Street professionals. I want to bridge that gap between Main Street and Wall Street. So this is going to access you guys, the everyday average American. It doesn't matter where you're from, right? You can do this now. And that's what I'm here to show you guys. I'm here to give you the roadmap. I'm going to show you the 8 essentials that you need to know to be a master trader. I'm going to give you the 5-step trading blueprint, folks. The blueprint is basically, how do you find the trade? How do you build the trade? How do you execute the trade? How do you track the trade? And then how you evaluate the trade. Then we're going to start with the foundation. This is where it all starts. The 3 M's: math, money, mindset. If you have the math on your side, you can trade with an edge. If you know money management and risk management, you'll make sure you don't blow up your account. And if you have the mindset to think the big picture, begin with the end in mind. One trade is not going to affect you. You have to analyze your trade over like 100 trades, because anybody can lose on one trade. But if you do it enough times using the law of large numbers, again, math, central limit theorem for all you calculus listeners up there, this will allow you to smooth out your equity curve and let the positive expectancy play out. So today we're looking at stocks, right? You always want to get started with stocks, how to look at a pattern, how to look at technical analysis, how to identify opportunities. Once you understand stocks, then you're going to leverage up to options, level up your strategies. You can use a lot less capital, let it become more efficient, right? Over here, you have to buy margin. Oh, actually, they just changed the rules. You guys want to know something that's going to help stock traders? All right, guys, here, let this deserves a drum roll. Let me pull a drum roll real quick. Drum roll. All right. So check this out, folks. Charles Schwab new rule: 25% margin. Check this out. It's effective July 13th. So I think there's a video here. How to use margin. All right. It's so new they don't even have it. You know what? Let me pull it up on the exact video. So this is breaking news, folks. This is going to help out a lot of people who are average traders, like most retail traders. Update day trading and margin rules. All right. So I'm going to Google this. This is called Schwab. This is new. Updates day trading and margin rules. All right, this is actually pretty important. So AI mode, come on, I can't even see the video. You know what? This is so important. I'm gonna have to pull it up. Copy here. I'm gonna email it to myself here so that you guys can actually see what I am talking about. My bad. Sorry. Let me you know what, while I look this up, I'm gonna show you guys one of my favorite videos here on YouTube. It's about compound interest. We are all about compound interest, right? So check this out. Kendrick knows about compound interest. Do you know who Ray Dalio? He's a billionaire. All right. Before I play this video, you guys need to know who Ray Dalio is because a lot of people don't know who Ray Dalio is. He's a billionaire investor. Check this out. This guy, Ray Dalio, Wikipedia, an American billionaire investor and founder of Bridgewater Associates, one of the world's largest hedge funds. So this guy is one of the most famous, richest, successful investors on the planet. So check this video out, folks. Check that out. So let me react to this. Okay, am I reacting? Is my screen up? Okay. All right, so check this out. So what he's saying is we all trying to hustle, right? We trying to grind. We trying to be like Nipsey Hussle. We grinding, right? And he's out in the streets. He's trying to raise money to make more barbershops. He wants to do it, but he doesn't know how to invest. So what does he do? He gambles. He's playing dice, right? 7, 11. And he was making money, but then all of a sudden his luck ran out because when you're gambling, you have the odds against you. So then the guy that he was gambling against was all up in his pockets. He lost all his money, his bag. He was all up in his bag. And so he doesn't know. He doesn't know how to get out of this rat race so that he could build wealth. Kendrick is saying, yo, check this out. All right. So that basically, folks, is what we are trying to do. So here, let me go back and open up my Gmail real quick. I think I just emailed me that link here. Let me not you know what? Shoot, you guys don't hack into my Gmail account, all right? All right, here, check this out. Let me pull up this. All right, so look, this is the new margin rules for day traders right here. We day trading, right? We don't actually have to day trade. I could swing trade. I can hold these positions for a week, 2 weeks. So as of June 8th, Schwab no longer counts day trading margin accounts. Check this out. So number one, they got rid of the old pattern day trading rules, right? The old rules, pattern day trading, where you needed $25,000 just to day trade. Now, boom, gone. This is a whole new world. There's no time in history, folks, where you can take a small amount of money and you can actually compound and grow that, just like Kendrick says, right? But you can compound that every day. Most people think of compound interest in years. Guess what? I don't got years to wait for my money to compound from 2,000 to 10,000, what, in like 40 years? I'm ready to compound that every day. Who's there with me? Give me a thumbs up if you want to compound your money every day. You can do it every week. You can do it every month, right? It doesn't matter, whatever your goals and objectives are. So the old rules are no longer in effect, but this is what the new rules for margin. And this takes into effect July 13th. So what is that? Monday, next week, Schwab will introduce intraday margin buying power for all eligible margin accounts with at least $2,000. So if you have $2,000 in your account, check this out. Intraday margin buying power represents a dollar amount a client can trade during the day in eligible securities with a 25% margin requirement. You know what that means? That means if you wanted to buy Apple, right? Let's make a number, $100. Instead of needing $100 to buy Apple, you only need $25 in your account to buy Apple for that day, because they know that Apple's not going to drop 25% in a day. So Charles Schwab is willing to take that risk, saying, you know what, as long as you can put up 25% of the stock, we'll let you buy it. See that? So this in the past, this is the old rule, generally limited to borrowing up to 50% of the value of Apple, or whatever stock. By contrast, intraday margin buying power is based on a default 25% maintenance margin. So now you can now buy stocks with a lot less capital. And if you guys want to learn more about, intraday margin explained, July 6th, there's a video right here where you can actually, you know what, we got time. Let's watch this real quick. Right? How much can you borrow to buy securities? So you don't have to use all of your $2,000, because you really can't buy that much with $2,000, right? But if you have margin where you can buy it on the cheap, where you don't have to put up the full amount for the stock, now you can use a little bit of leverage. Before it was like 2-to-1 leverage, but if you do intraday margin, now it's like 4-to-1 leverage. Right? So if you open a position and then you close it in the same day, it doesn't make sense that you need all this buying power, all this money in your account. You're not going to lose it all. Apple's not going to go down to zero. So if you're going to close it by the end of the day, the broker says, okay, you know what? We'll let you trade Apple, and you only have to put up a little bit, because as long as you can cover your losses at the end of the day, our risk is covered. Right. So margin call is just brokers saying, hey, yo, you got to put some more money in your account, because they don't want to take risks in case at the next day it gaps up or down, and then now you don't have enough money on in your account to pay it. Right. This is what rich people do, right? Rich people like Elon Musk, they borrow money from their trading account because they have billions of dollars in their trading account. So they can actually borrow against their stock and then they pay themselves back. So there's loopholes that the rich play that we don't know about. But once you think like the rich, right, you got to be wealthy. You got to think like the wealthy. You got to think like insurance companies, like casinos. Do what the wealthy do. Right? Instead of Apple buying at 100, you can only buy it for only 25 bucks. This is what leverage is. If Apple goes up, you're only putting up a little bit, your return is going to go up. All right, so this gets into the technicals, but you guys get the drift, right? So let's get back to our trading account. You can see, I'll show you how the margin requirement works. Right now, it's July 9th. This doesn't go into effect till July 13th. So let's take a look at our other positions. We got Pfizer. Oh, look at SanDisk. We're up 200 bucks on SanDisk. Look at this. What did we do? We bought this bad boy yesterday, right? We bought one share, 1676. Now it's at 1876, folks. Why is that? Let's take a look. SanDisk. Why did we enter this trade? SNDK. Well, look at that, folks. If you know how to read a stock chart, if you know how to identify opportunities, look at this. This thing went as high as 2354, went down. Look at this big doji candle. This is a doji candlestick, and it happened right at this prior low here. What is that? About 1525. And then we got confirmation yesterday. Boom, I entered it, saw the opportunity, gapped up, boom, and we got in right, and we have our profits. So I'm going to exit this. This is a nice profit. I don't need to, you know what I'm going to do? I'm going to put a stop loss right below here. See this stop loss? I'm going to move it up here. This is called locking in your profits, folks. Now my stop, I bought this stock down here. Now I'm going to move it up here. So in case it wants to go higher, I can participate in a higher run, right? But if this does turn around, guess what? I still made profits because I took the risk off the table. Does that make sense, folks? That's how you trade like a professional. And that's what I'm here to show you, how to trade like professional in 30 days or less. Take Two. Take Two, we're up $6 today. You guys know Take Two is the maker of Grand Theft Auto, right? Take Two Interactive. So TTWO. This here is where Grand Theft Auto is releasing Grand Theft Auto 6, the biggest video game hype in history. And it hit resistance right here, which was the prior high in October, went down some more. And what I'm thinking is going into November, there's going to be so much hype into Grand Theft Auto that I wouldn't be surprised to see this thing break above this high. That's why I have a stop loss right here. I shorted it just to take advantage of this short-term resistance. But if this thing breaks through this resistance, I'm going in. I got 10 shares to buy it if it breaks through 270, right? So that's Grand Theft Auto. And here's the hype surrounding Grand Theft Auto in case people who are not familiar with the game. This is all the hype. Grand Theft Auto, right? And here's the interview with the CEO. And this is why it's so all right. That's a lot of you guys, right? So check this out. See, so this is why there's so much hype on Grand Theft Auto. This thing has been delayed. The last Grand Theft Auto was 10 years ago, folks. 10 years ago was Grand Theft Auto 5. Can you imagine a game that's so popular, but they waited 10 years to finally release the next one? So they had all these releases that were supposed to be released in 2025, and then it's already almost 2027. The actual date, folks, that this game is released has been announced. Do you guys want to see that announcement? What? Okay, so here is the actual release date. And this is official, folks. All the people are so excited about this. So, oh man, I'm in the wrong account. I need to go to my premium account. Here, let's go. Right. So you could pre-order right here. So you go to Rockstar Games, Take Two Interactive, right? This is their biggest drop ever. Pre-order Grand Theft Auto 6. And how much? This is midnight. Look at that. People are getting so excited, right? So if you guys go to reject those cookies, um, pre-order begins June 25th. People are ready. Grand Theft Auto 4 is now set to launch November 19th, 2026. Let's check a look at this trailer real quick. All right. So that is why there's so much hype in this game. And this game, look at this. Back in my classroom at Cal Hills, Milpitas, shout out 408, Milpitas, Mustangs, right? We looked at this stock. It bounced off of 190. Look at this. It bounced off of 190 again in March, and it proceeded to go all the way back up. Guess what? To the prior high. Guys, charts are nothing more than the psychology of traders, supply, demand. Don't buy it randomly here or here. Wait for the opportunity. Oops, excuse me. Wait for the opportunity to present itself. Boom. And then you take advantage of it, right? So if this thing comes back down, I wouldn't be surprised, right? If people sold into strength, have this thing pull back. And then if it pulls back, boom, jump in before and ride that hype beast machine into the November release date. So that's Take Two Interactive. And then the last one we have is Valero, right? Valero, we saw that it was breaking through. So look at that. See that? We had a resistance level. Boom. Look at that big breakthrough on volume that was above average. And so we're going to see this thing might pull back to the prior support. So a lot of times old resistance will act as new support. So if this thing comes back down here, I might look to maybe add on another share on a bounce. So that is the recap morning. Guys, I appreciate y'all. I'm going to leave you guys with some informational videos as we go into the next episode. Actually, you know what? I'm going to show you guys how to look at some, get some ideas, right? So check this out. Most of you guys don't even know that this exists, but we have, instead of watching CNBC, what if we actually watched news that actually gave us some potential ideas? Because when you go on CNBC, what I really hate about like people like Jim Cramer and all that, they tell you buy, 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 sell, sell, sell. But they don't tell you like when to buy, when to sell, when to get out, right? They're just telling you, and there's no accountability. That's why I'm trying to change this game, because we need accountability in this game. We need to put skin on the line, put money at risk, right? Because it's here. Let's look at Jim Cramer. I know her, Jim Cramer. He actually talked about Grand Theft Auto 2, right? But they don't talk about what to buy. I mean, when and what price. So here, check this out. This is what he. But this is people just hyping stuff up, but they don't tell you. Right? EA Sports gone private. Right? Look at that. Next May. So you know Grand Theft Auto has been pushing back the release date again and again. It got so many people frustrated that they actually had, hold on. Right? Any form of media. This franchise, Grand Theft Auto, is $1 billion franchise. It's bigger than movies, because if you saw the trailer, it is kind of like a movie, but it's an interactive movie. That's why video games is a huge industry. For those that don't know, we'll do a segment on video games and the video game industry. Right? Guaranteed blockbuster, guys. And there's so much hype behind this. Yeah, 1.4 billion. La da 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 da. So that's that. And then here is how people have been reacting. So you want to see what hype? Check this out. GTA 6 react uh delays. Watch. There's so many delays that people were like delayed again. Watch. Right? The trailer came out in December of 2023. How much anticipation hype is built up from 2023 to 2026? You can only imagine. But that is going to cause more hype, right, folks? So this delay, let's go back to Take Two Interactive, which is the maker, the owner of Rockstar Games. That's why this was such a great opportunity. When I saw this, I said to my students, guys, we know there's going to be hype coming into this November release. And what happened? It went from 192 to 265. That's 70 over $70, right? So the next time I see this thing come back down, I think that's going to be the last time you can actually get in and then ride that hype beast all the way up. All right, folks, that was the first hour under the belt. I'll leave you guys with the Schwab Network you guys can watch, and then I'll be back at the top of the hour. Right here, if you so if we want to look at airlines, right? This is what's great about this. You could watch it in here, and then you can pull it up. Southwest Airlines, right? Love, LUV. Southwest Airlines, they're talking about this, but what they don't do is analysts don't talk about the technical analysis, right? I got to do a little technical analysis before I just buy something. I got to say, okay, well, what's the price? We have a nice little pullback. Okay, a little pause here. This could be, but would I want to buy a stock in the middle of a range? No, right? So what are the Dallas Delta Airlines, DAL, right? Notice, oh, this chart looks a little better. Look at that, right? Because you had a pullback from 95 to 90 to 89, but this trend line, you can see the trend is definitely up, right? We got a nice upward trend there. And we got breaking this resistance, right? This resistance became support, broke out. So I'm thinking this could be a support. And then if it gapped up, I would ride it up here with my wrist right below here, right? So this is how a classic bullish pullback. You got a pullback, boom, leg higher. Pullback, boom, leg higher. Pullback, boom, leg higher. Let me show you a video on that, and I'll leave you with that. Let's sorry, right here. I'm going to put in an order, buy, edit, put it as a stop because I want to buy it only if it gets above here. I don't want to buy it right here. If this thing gets higher, I'm going to try to ride it up here. Okay. Actually, this is the confirmation today. I'll get in right now. And then whoop, it has to be, oh, this is a stop order. My bad. Here, watch. I'll buy it right now after this confirmation bounce. So buy a limit of this price or better. Limit means buy it at this price or better. Boom. Okay, I bought it at $89. I'm going to put my stop loss right below here. $4, right? Let's just risk. And then we got to change this to a stop loss. So this is my stop loss order. Remember, any trade that doesn't have a stop loss order is a gamble. We're not here to gamble. We're here to trade. So that is Delta Airlines. What else were they talking about? Here, let me see if I can add myself here. Let's see. So, a little brief overview here. What my goal is to show you the challenge, right? How can I grow 2K? Actually, I added another K in there, 3K to 6K in 30 days. That is my goal. 1% a day is something I feel like is achievable. I'm going to try to do 5% because I'm going to get into the world of options trading, which gives you a lot more leverage. And hold on one second. My trading room. Let me put this in. All right. So let me go over the disclaimer again now that I'm back on board. You guys know I'm not a financial advisor. I'm not giving you guys anything to buy or sell. This is all for educational, informational, and entertainment purposes only. Got it? Good. So this is what I want to talk about today in this segment is the trader's roadmap, where a lot of people mess up in trading is they don't know where to begin. They don't know what to buy, when to buy, how much to buy. They dump into stocks without even understanding money management. They get into options without understanding a stock chart. And then they go into day trading and then they lose and blow up their account. I'm here to give you the blueprint because it's not that complicated. I figured it out by reverse engineering the process, right? Because I was just like you. I was in the gambler's shoe, gambling, losing money time and time again. And I said, you know what? If I'm going to do this and I'm going to risk my hard-earned money, I want to make sure that I do it in a disciplined, risk-based approach. I'm not here to just throw away my hard-earned money. I'm here to make my money work for me. And trading is not a get-rich-quick scheme, folks. A lot of people, that's how they lose their money. They try to make a lot of money too fast. I'm here to make 1% a day. 1% a day is 20% a month. 20% a month is 140% a year. Let's not get greedy, right? In order to be successful, you got to trade with a goal. You got to trade with purpose. You got to trade with the end in mind. If you don't trade with that type of focus, you're going to get blown off the map because that is the reality of what it takes to be a trader. So let me show you guys the blueprint, the 8 essential elements of the master trader. So let me share my screen. Wait, am I not sharing? Okay, hold on. Let's go back. Okay, so in order to be a successful trader, you need to be the house. They always say the house always wins. And the reason the house always wins is because they have an edge, and that edge is math. Whenever you can put the math on your side, which in essence is a positive expected value, right? Now you can actually see the probabilities play out. So what I want you to do is go in here and say 90% of traders, they fail. Why do they fail? Because they jump in without knowing what they are doing. And would you be a doctor? Would you go into any profession without knowing the tools of the trade, without having a plan? No, right? So why would you think about trading your hard-earned money and not know what you're doing, not have a plan, not have your risk defined? Because if you go in there without defined risk, you're gonna lose your money. So I'm here to give you the roadmap. I'm gonna shortcut your learning curve so that you don't get off the path. That's where most people lose because there is no curriculum. There is no academy course that sets you up for success. That's what I'm here to change. I want to set you guys up so that you guys can avoid all the beginning pitfalls, avoid jumping from system to system, strategy to strategy, but actually treat this like a business. Because if you want to make money, folks, if you want to treat your trading as your main business, you got to treat it like one. And that means tracking all your trades, defining your risk, letting the probabilities play themselves out, because that, folks, is what's going to make you into a professional trader so that you can have a repeatable system again and again. All right. So let's go back and make sense. Without taking risk, everything is just theoretical, right? Let me move this back so that I'm going to use the green screen in my next episode, but not in this episode. So, in order to become a master trader, you need to respect risk, manage risk, and take risk. Let that sink in. You got to manage risk, take risk, and respect risk. You need to trade with the math on your side. Remember insurance companies like State Farm? Well, I don't know. I'm going blank here. Geico. All these insurance companies are just risk managers. They sell you risk. They know that 99% of the time, that insurance policy that they sold you is going to expire worthless, meaning they get to sell you insurance every month. And if you don't get into an accident, they collect your premium. Now, doesn't that sound like a business that you can do? You can actually do that. You can sell insurance on stock. That's what the name of the game is. Options is nothing more than insurance on stock. So, how do we become our own stock insurance company so that we become that